Hi, I'm Lorna Illingsworth, an independent financial advisor for Protection Investment Southampton. Today we're going to discuss paying capital gains tax when you sell your property. Capital gains tax is a tax you pay when you sell an asset for more than you bought it for. When it comes to property, the good news is that thanks to private residence relief, you won't usually need to pay capital gains tax if you're selling your main home, but it will apply when you sell a second home or investment property. For a property to be considered your main residence, you either need to have lived there as your only home throughout the time you've owned it, or if you own multiple homes, you must have nominated it as your main residence and be able to show that you genuinely live there. There are some situations where you may need to pay capital gains tax, even on your main residence. For example, if part of the property is used solely for business purposes, if the land extends beyond 5,000 square meters, if you're a property developer, or if you rent out part of the property. These rules can be a little ambiguous, so it's always wise to take professional advice. If you're selling a second home or a buy-to-let property, capital gains tax is likely to apply. You'll pay tax on the gain above your capital gains tax allowance once any allowable deductions have been made. If you leave a property to your spouse, civil partner, or to a charity, there's no capital gains tax to pay. If you inherit a property, there's also no capital gains tax to pay at point of inheritance, as long as inheritance tax has been dealt with. However, if you later sell the property, capital gains tax could apply on any increase in value from the date you acquired it to the date you sell. The amount of capital gains tax depends on your income level and the profit you make. Basic rate taxpayers currently pay 18% on the gain. Higher and additional taxpayers pay 24%. Remember that the gain is added to your income for the year, so selling a property could push you into a higher rate tax band. Every taxpayer has an annual capital gains tax allowance. For the 2025-2026 tax year, this is £3,000 per person. If you own a property jointly, couples can combine their allowances for £6,000. However, it's important to note that unused allowance cannot be carried forward to future years. There are several legitimate ways to reduce your bill. You can deduct the costs such as stamp duty, solicitor fees, and estate agent fees. You can also deduct improvements like extension or a loft conversion, but not day-to-day maintenance. You can also make use of allowances such as your spouse, and consider timings. If selling at the end of the tax year, it might be worth waiting until the new tax year begins. In some cases, letting relief may also reduce your bill if you lived in the property while renting it out. Capital gains tax can quickly become complicated, especially if you have multiple properties or are thinking of transferring ownership to a spouse. And mistakes can be costly, so it's always recommended to speak to an independent financial advisor and accountant. If you're worried about capital gains tax, please call us on 02380 668 407 or visit our website.